Hello to all traders and welcome to my channel. You no longer need to spend a lot of time finding a professional and simple scalping strategy. I have found it for you, and in this video I will explain it to you completely. So without further ado, let's move on to today's strategy tutorial. As always, first we open the TradingView website. Then we need to select our symbol from the symbol section. You already know that since this is a scalping strategy, you should not choose a symbol with low liquidity. Now we need to go to the time frame section and set our time frame to 5 minutes, which is my preferred time frame for trading. Next, we need to add the first indicator to the chart. To do this, go to the indicator tab and search for 3RD wave. Once you find it, click on it to add it to the chart. Now I'll teach you how to use this indicator. This indicator is a technical analysis tool used to identify and confirm the trend of Elliott wave. It usually seeks to identify the third wave of Elliott patterns, which is considered one of the strongest and most powerful waves. In general, the 3RD wave indicator is specifically used to identify the third wave of impulse waves because the third wave is usually the longest and the strongest wave in an uptrend or downtrend. After adding the indicator to the chart, you can adjust its settings by clicking on the gear icon in the indicator window. Now let me explain the different parts of these settings so you can own customized settings. Zigzag period. This value determines how the indicator selects the highest and the lowest price for wave identification. The number 8 means that the indicator uses every 8 candles to identify turning points. Increasing this value will smooth out zigzag patterns and reduces volatility, while decreasing it will increase the indicator's sensitivity to smaller price changes. Mean retracement. This value indicates the minimum percentage price retracement identified as a wave. The value of 0.382 means that retracements less than 38% are ignored. Max retracement. This value indicates the maximum percentage of price retracement identified as a wave. The value of 0.682 means that retracements more than 68% are ignored. Check volume support. This option is used to check trading volume during wave formation. Enabling this option makes the indicator identify only those waves supported by trading volume. Targets. Target 1. A value of 1 here means the first target is equal to 100% of the first wave's length. Target 2. A value of 1.618 here means the second target is equal to 161.8 of the first wave's length. Target 3. A value of 2.618 here means the third target is equal to 261.8% of the first wave's length. Now, based on the explanations I provided, you can adjust the values to reach your desired settings or use the settings shown next. As you can see, this indicator shows us triangles that we consider as signals for entering trades. When you see green triangles, you can use them to enter buy trades, like this point. And when you see red triangles, you can use them to enter sell trades and achieve good profits. However, I must remind you that having just one indicator is not enough for a reliable strategy. So, to increase the accuracy and win rate of this strategy, we need to add a second indicator to the chart. To do this, go to the indicator tab and search for market bias. Once you find it, click on it to add it to the chart. Now, as always, we need to change the settings of this strategy. So enter its settings and make the changes you see so that this indicator is ready for use in this strategy. Now, I'll teach you how to use this indicator. The market bias indicator is another technical analysis tool used to identify the overall market direction and determine the market trend. This indicator can help traders understand whether the market is in a bullish, bearish, or sideways state. When the candles are above the line of this indicator, we understand that we are in an uptrend, and at this point, we can look for buy signals. When the price candles are below the line of this indicator and the color of this indicator is red, we understand that we are in a downtrend, and at this point, we can look for sell signals. Now, it's time to tell you how to execute buy and sell trades and where to place our stop loss and take profit levels. But before that, I suggest that if you want to always be profitable in financial markets and grow your capital, make sure to watch the videos on the channel because I have created many profitable strategies for you, so don't miss them. Let's start with buy orders. First, look for a green triangle on the chart. We consider this triangle as a buy signal. Next, make sure that the price is above the green market bias band, which means we are in an uptrend and can expect the price to rise. Once you have checked these two conditions and both are met, you have found a suitable entry point for a buy trade. Now, it's time to consider a stop loss for our trade. For this purpose, you can choose the last swing low and place your stop loss slightly below it. Remember that for money management, you are allowed to risk only 1% of your total trading capital. Now, all you have to do is open your buy trade, and for take profit, consider a risk to reward ratio of 1 to 1.5. Now, just wait for the market to hit the target and close your trade with a profit. For sell orders, first look for a red triangle on the chart. This triangle is exactly the sell signal we were looking for. The next step is to make sure that the price is below the red market bias band, indicating a downtrend in the market, and you should prepare yourself for sell trades. If these two conditions are met, we understand that we have found a suitable entry point for a sell trade. Now, you need to set your stop loss. To do this, find the last swing high and place your stop loss slightly above it. As I mentioned before, you need to have proper money management and only risk 1 or 2% of your total capital in this trade. Now you can enter a sell trade at this point, and for the take profit level, consider a risk to reward ratio of 1 to 1.5 and wait for the trade to close with a profit. If you learn money management properly and apply them to all your trades, you can definitely become a profitable trader and have a bright future ahead of you. I hope this video and the explanations were helpful to you. Until the next video and another scalping strategy, goodbye.